Good afternoon. Thank you for joining us. It's Wednesday, August 12th, 2015, and welcome to Ask the Experts. I'm Chris Grams. I'm with CME Group, and I am joined by two such experts this afternoon. We're going to talk about grain and agricultural markets as a result of and the impact of today's USDA crop reports. Directly to my left is Cherr. He is the head of agriculture and weather research and forecasts at Thomson Reuters, where he also leads the Lanworth team. To Corey's left, Ted Seifried is Chief Market Strategist of Zaner Ag Hedge Group, and you both are joining us on Ask the Experts for the first time, so thank you both for joining today.
Thanks for having us, Chris.
Appreciate it. Quick note to our viewers, you can ask Corey and Ted some questions online. Directly below the media player, you see a Submit Your Questions box. Please do submit those questions, and we'll make sure that Ted or Corey can get to those during our broadcast. Gentlemen, without any further ado, today's results were in a bit of some conflict with what the trade expected for production and end stocks. Very lively report, very lively markets today. Ted, I wonder if you could start off by giving our viewers an overview of what we saw in this morning's crop reports.
Yes, so this was a shocking report by all means, Chris. In fact, I believe, I haven't had the time to go back and look at all of the previous reports, but I believe this was the furthest we've been off as far as an average trade guess on an August report in history. So we ended up seeing the USDA raise yield for both corn and soybeans when we were, by and large, looking for a sweeping reduction in corn and soybean yields. And when I talked about missing, we missed the corn carryover by about 300 million bushels. We missed the soybean carryover by about 170 million bushels. Now, as Corey pointed out when we were talking a minute ago, as a firm, we had some of the highest estimates for both yield and carryover, but we were nowhere near the numbers that the USDA gave us here today. And really, there wasn't anybody in the trade looking for that increase of 2 bushels an acre in corn and an increase of almost a bushel an acre in soybeans. So it caught us by surprise in a big way. And then you had some very significant and sharp pressure in the markets today. At one point, you had soybeans down limit, down 70 cents. At another point, you had corn down limit, down 30 cents.
Well, I know corn and soybeans were the star of today's report. Anything surprising about wheat in today's report as well?
Well, for as exciting as the corn and bean reports were, the wheat report was very much even keel. It came in within a couple bushels of the average trade guess as far as old crop and new crop carryover, and specifically new crop carryover. So nothing big there, although the world number did come in a little bit larger than expected. That kind of got lost in the mix as everybody was focusing on the corn and bean numbers.
Corey, what are your thoughts on today's report? Obviously some big surprises. Anything that you'd care to add to Ted's commentary?
Well, it's always tough to forecast the forecast. That's the challenge, especially in the August report. So as Ted was saying, even those of us who, in our objective view, expected very high production numbers by the time we were done with the season, didn't really expect USDA to catch that as quickly as August. Usually there's some lag time there. They came in really hot out west and in the upper Midwest and in the South, and those numbers, some huge records in places like Nebraska and even Minnesota. Usually it'll take USDA some time to figure that out when the objective reality is so much different from your 5-year averages that it takes a few months or a month or two to percolate through the forecast methodology. But it seems to have come through really quickly this time. So something different may have happened. Not really sure how they what they changed in the methodology to get to that.
So I won't ask you what the USDA was thinking and being so aggressive in this particular report in August, but I guess a lot, is it fair to say that the trade expected, or at least the market expected, that the USDA would reduce the yield as a result of some of the poor weather we've had earlier this year?
Yeah, I mean, the trade by and large was looking for a reduction in yield for both corn and beans. I think the average trade guess was a 164.8 or 164.7 in corn. It came out at 168.8, which is 2 above the previous number that they had, the trend line number that they had been using. And for soybeans, I believe we were looking for 44.7 or 44.8. Came out at 46.9. So for the most part, I mean, I think there were a couple. Were you guys looking for the USDA to increase yields?
No, well, our expectation for what the USDA would do was that they would
Was
come
lower.
in close to the market expectation and then
Okay.
eventually
Right.
increase.
Yeah, so as a whole, the market was looking for a reduction in yield, a pretty significant reduction in yield, and we got a pretty significant increase in yield instead. And what that did to our balance sheets, when you look at carryover, again, it's an extra 300 million bushels of corn that we weren't expecting to be there, an extra 170 million bushels of soybeans that we weren't expecting to be there. In a lot of ways, I would kind of equate this as far as the magnitude of the surprise of this report, or the gravity as far as a game changer of this report. Very similar to the report we saw quarterly grain stocks in early 2013, when we found an extra 400 million bushels of corn that we weren't expecting, and we were down sharply for the next 3 days. Now, I don't know if we're going to see something like that with this report. I do think that we are going to see, I don't think the dust has settled yet. I think we're going to see another push lower, because I think a lot of the big speculators' funds, for example, which had been caught really quite long on this report, weren't able to get out of all their positions here today, and are probably looking at some pretty massive margin calls going into tomorrow. So I think you're going to have to see some more liquidation there from the funds in the next 24 hours or so. But once that dust settles, I think we're all going to kind of take a look at this report, scratch our heads a little bit, and kind of say, okay, yeah, but we realize that the USDA forecast, the yield forecasting models, are based on pretty much the weather that is in July. Very highly weighted in July, for corn specifically, more so August for soybeans. But the thing about it is that we're kind of not paying attention, or the USDA yield estimates might not be paying attention to the adverse weather that you'd been talking about, Chris, that we had in April, May, and June, with the two wet conditions and flooded out fields and so on and so forth. So I think as we progress and as we go by, I think the lack of nitrogen, which has been washed away by a lot of the rains, and some of the problems that we have with disease when we plant when we're really wet, specifically in soybeans, I think a lot of that will be showing up here over the next couple of months. And I think we're going to end up closer to today's trade guesses for the yield rather than where the USDA was. But at least for right now, we're looking at some very big numbers that we really never expected to see in this market, in this crop year.
What about the regional or state level? Were there any numbers that surprised you, kind of at that regional or state level, Corey or Ted? I don't know if you were able to dig into the numbers at that level today.
Well, Minnesota and Nebraska were really the states that stood out. Yeah, Nebraska for corn, especially Minnesota for soybeans, especially.
Yep,
yeah, those numbers were just unusually large. The Eastern Corn Belt, they're probably a tad high. There's, I'm sure, some diversity of opinion as to how much damage has been done in the East, and I think even from our perspective, they're a bit high in Illinois and Ohio on corn.
So
maybe
Ohio
on
is
soybeans.
202 was an interesting number.
Ohio, and Ohio yields above corn yields above Indiana.
Yeah.
Strikes us as very opposite of what we saw in the field. But the real question is, how much damage do you really have in the East, and how much is it really going to come down, and then how much is that offset by what's going on in the center, in the West?
Right.
And we would have thought Nebraska and Minnesota and South Dakota and those states would have been kind of the sleepers in this report. They wouldn't have done much with them, and they just kind of would have walked until September or October. But they woke up real early, and those numbers are huge. We kind of think northern Iowa is not too far behind in terms of those numbers. You might get a little bit of a reduction still in the East. I think there is still some damage that needs to be accounted for, but without it being really hot like it was in 2010, some of the damage that we see from the extreme moisture probably mitigated a little bit. And if you're looking at the forecast right now, there's a lot of waves of cool weather coming through. It's not going to be consistently strongly warm.
Right.
So if you're thinking about, is this the peak in the corn yield? Do the numbers come down from here, and if so, by how much? It's going to be hard to put a big dent in them because it doesn't look like we're going to be really hot moving forward.
Now, Corey, Lanworth team at Thomson Reuters just completed a crop tour, and since we're kind of talking about what the USDA said today at sort of the state level, maybe you could give us sort of a high level of what you guys found on your crop tour recently.
Sure. Roughly consistent with with the numbers that we saw today, a lot of damage in the east. I would say we saw even more damage in Ohio than was reflected in the reports. Pretty bad in Indiana. Illinois, a real mixed bag. And the number that we got today from the USDA, maybe a bushel or two higher than our own objective estimate from Illinois. Illinois is kind of a question mark for us still. There is a lot of stress on the plants, and you go into fields that even look good from the road. There's firing on the leaves, yellow tip,
a lot of pollination issues.
That's
in lots of areas, not just a section, but lots of areas of Illinois.
I don't think I've been in a single field in the fields I've been in Illinois that didn't have some kind of problem. And so the question there is, again, just how much do things decline from that 174 bushels per acre. And there's some risks there, I think, particularly in Illinois, but again, the temperatures for corn especially can play a big factor there. And interestingly, the field data that we took in Illinois did come back better than we expected. So even with the damage that we were seeing in some places, there's other places where the crop was good enough that it seemed okay.
But overall, fairly consistent with what you saw today in the USDA reports. And how sort of looking beyond today's report, how important is weather for corn and soybeans? Is that something that our viewers should be concerned about? Obviously, producers are looking at the weather each and every day. How important of a factor is that from now until harvest?
Oh yeah, to me that's
yeah. I mean, weather's still very important for corn, but it's very, very important for soybeans for the next few weeks. Corn, to fill out and really to put that top end on the yield, we're still going to need to see nice weather. Heat would be the main enemy of corn right now. Soybeans are still the more moisture sensitive crop at this point, so we're still going to need to see rounds of rain. We have some areas that have been getting a little bit on the drier end. We're included in that mix. And we'd like to see some follow-up rains here over the next couple of weeks to keep things moving in the right direction. But it wouldn't take much as far as a change in the forecast to a little bit drier, maybe a little bit hotter, to remind us of kind of how we finished up last year. We had a lot of crop tours going on this time of year last year. You guys in particular, we ended up, with the USDA numbers at least, ended up 12 to 14 bushels lower than the crop tours we were doing at this time. So there's a lot that can still change. Corn, for the most part, we've gotten through the key moisture sensitive time frame. So now it's just a matter of, can we fill it out and can we get that top end of the yield? But weather still has a big impact here, especially for soybeans.
Yeah, with corn, as long as the nighttime temperatures don't get really, really warm and sustain at really warm levels from here on out, you should have pretty normal grain fill, especially in Iowa, in Nebraska, and the Dakotas, and the upper Midwest. We're actually looking a lot better than last year. That was the area that had the moisture problems. That was the area that our field samples came back basically too high. Although I'm not sure we weren't counting too many double ears and extra stems on that tour, and that wasn't the source of the issue. More than the grain fill, but those areas this year, the moisture is much more optimal. The corn belt, kind of midsection of that area, is decent in terms of the nighttime temperatures. They're not high. It's actually in the Dakotas. It's a bit warmer than last year. That's actually a good thing. Last year was too cool in some of the northern areas, and it wasn't optimal.
Yeah, we had frost issues in the Dakotas last year. With the potential continuing of the El Nino, it could be looking at an Indian summer sort of time frame, allowing some of these later developing crops to catch up. I think that's positive for yield if that holds up. So yeah, weather's important when we get that first frost date. Again, some of the stuff out there is still behind. We did plant a lot of late planted, especially soybeans. So we could really use no frost, late frost dates here this year. So yeah, weather is still very much important to the markets. And now that we've digested this report, and again, I think you're going to have a lot of guys, especially the guys in the producer camp, saying, yeah, but I don't see these yields when I go out into my fields. So, I think now that we're past this report, we'll kind of shake it off a little bit, and we'll get back to talking about weather. And I think at the moment you have some hints of bullish tones to that weather forecast at the moment.
Do you see any implications for livestock producers in this report?
Yeah, absolutely. Feed just got a lot cheaper today. Well, actually, yes and no, because corn finished well off its lows, 12 cents off the lows. I mean, we were limited down there, but we didn't stay there very long. And, 12 cents off the lows is, it's a nice recovery on a day like today. But yes, feed prices have gotten cheaper today. I think, if you look at this balance sheet and you really believe these USDA numbers, that could mean low feed prices for time to come. But I think I'm recommending to my guys to be a little bit more aggressive about adding to the feed that they have booked right now. If they were unhappy with the percentage that they were at before we had our rally in July, or before we just had the bounce going into this report, now is an opportunity to kind of add to that, and I think it's a good time to do that.
Ted, you mentioned a phenomenon that I want to ask Corey a little bit about, El Nino. And I know this is a weather phenomenon you guys have been following. Had the opportunity to sit through a presentation you gave yesterday to some of the Thomson, Reuters, Lanworth, and CME Group customers. What are you seeing with the development of El Nino, and how do you think that could impact, I think, firstly, for our viewers, North America, but there are other impacts that you're looking at, as you mentioned yesterday, Eastern Europe, Australia, perhaps South America as well.
Yeah, it's great to have a weather guy. This is
Well,
perfect.
We've already had a lot of the impacts here in the U.S. from the El Nino that we've got. We had an El Nino last year with the really cool temperatures. That's something we frequently see with an El Nino. It was kind of a late blooming El Nino, and it hung around. It never went away, and has only gotten stronger. And for anyone who doesn't know, when we're talking about El Nino, it's the simple explanation here is it's just warm water that oscillates back and forth across the Pacific Ocean. Mm-hmm. It's pretty far away in the Pacific Ocean, but it has a lot of downstream effects on weather, really globally, but especially in the production areas that kind of ring the Pacific Ocean. So the Western Hemisphere, the Americas, also Australia and Southeast Asia. You typically, in the Americas, you typically see relatively cool temperatures and adequate, or in the case of this year, more than adequate rainfall when you have an El Nino. And then out west in Australia and Southeast Asia, you tend to have drought in the wheat areas and the oil palm production areas. This year, that's done what it's done already to the U.S., and that's not going to change. It does mean that it's pretty likely that we're going to have adequate or more than adequate rainfall also in Australia and Brazil for the crops that are harvested in 2016. So if you're thinking about the soybean balance sheet and all the extra beans that we have right now, it's questionable as to whether or not some of that's going to go away in the U.S., but we're likely to again have some really big production numbers out of South America as we move into 2016. The current El Nino that we have is not going away. It's very strong. It's actually the second strongest on record. It's almost too strong.
Strongest in 100 years or so, something.
Yeah, I think 97, 98. That one was a little bit stronger than this one at this point. It's actually gotten so strong that it's kind of interfered with itself, and so we haven't had temperatures as cool as we did last year. But it's basically going to maintain some good production numbers here in the U.S. and in South America as you go through 2016. It's still a numbers game, right? But that's what's likely to happen.
So El Nino is a positive thing for South American production?
Yeah, and generally for corn and beans, yeah. In South America, especially in Argentina, you tend to have a lot of rain when you have an El Nino. We saw this in Argentina this past harvest. There was a lot of rain and a lot of concerns about what the crop was going to do. And a lot of panic, but in the end, we ended up having a really huge production number.
Doesn't it potentially mean that the northern part of Brazil could have issues with dryness from the El Nino? Sort of similar like to our southern plains? Yeah, northern Brazil, you can almost think of it two separate regions. You get the north and the south. And the south, a little bit more like Argentina, that will tend to benefit from the El Nino as well, and that's a big important swing area. The north, everyone pays attention to the north, but those guys, when they're dry, they're still having 8 inches of rain in a month, and they're still plenty wet. It's tropical. It's sort of what's that transitionary zone right there. So,
and we had a scare in that region this year, and still wound up with
planted.
Conab's got a 96 million ton soybean number, with the dent that was put into various places in Brazil. And so it's hard.
If you don't mind, jumping back to the North American and the tail end of this growing season, does El Nino suggest that we can have a very mild fall, maybe push back some frost dates a little bit and keep some warmer temperatures around?
I believe so. I don't know how strong that correlation really
Okay.
is. I think from our perspective, we're looking at 2011 as, let's say, an early freeze scenario just to evaluate what the damage would be if we saw the same thing. And I think, especially in Minnesota and in South Dakota, corn in particular is planted so early.
Yeah.
That any impacts that you have from a very early
Right.
freeze, they're not likely to affect the bushels. You're really looking at impacts more on test weights. You're not going to see anything from that coming out in the production numbers. Maybe in the stocks later.
I was thinking more for soybeans.
But for beans, that could be a different story because things are so late. I think, and the same with the rainfall and the effects on the bean yields. I think beans are a little bit more of a weather market than corn right now.
Yep, agreed.
Well, I think we've covered a lot of the supply factors here, factors that could potentially impact supply. Ted, I wanted to talk to you a little bit about some of what you're seeing in demand. And as we were talking on the way in, obviously the one of the big questions is always, what is China demand going to be like? What is China demand doing? But we had the announcement just this week that China is devaluing the yuan. So is that having any additional impact on demand from China?
Absolutely. I mean, additional demand, that I don't know. I think the struggle is, or when we saw that the Chinese were devaluing the currency and letting it trade in more of a free market than what it had been, there's two concerns that pop up immediately on something like that. One, strength of economy, and in order to continue the strong soybean exports or strong commodities exports in general from China, we really want to see them continue to grow their economy and for them to continue to be strong. That causes concern for that. The other thing, though, is when they do that, that gives them less purchasing power. So does that mean that they're going to be less aggressive buyers here this year? And that's a very good possibility that might be the case. In fact, China works in interesting ways. A lot of the major end users in China may have been privy to this information as far back as a year or two ago, and may have been aggressively building soybean stocks over the past 3 years, which would explain some of the record demand that we've seen in front of something like this, knowing that it may have been coming. I'm of the opinion that China, after the double drought scenario that we had in 2012 with South America followed by our drought, really depleted all of their soybean stocks that they had both in the private and public sectors, and they have really gotten aggressive over the past 3 years rebuilding those stocks. They had to do the same thing in corn, but their own production offset that a lot quicker than they were able to do it with soybeans. So they had been stockpiling beans, and I think to this point they may have accomplished that mission. So going forward, I'm very concerned that we're going to see Chinese demand for soybeans quite a bit lower than what we've seen in the past 2 or 3 years. Right now, we're 67% year over year behind where we were this time last year in new crop bookings. That's a concern. You put the currency issue on top of that. You put the economic issue concern on top of that, and it really starts to get a little bit concerning. You did see the USDA here today, and this is a number that kind of gets lost in the mix when we look at the big production number changes and yield and acres for soybeans, 800,000 less harvested acres. When we look at that sort of thing, that's what we were focused on in this report. But lost in the mix there, the USDA did cut exports by 50 million bushels for soybeans. Now, that's already, we were already at, 25 million bushels below their expectations for this year. So we're kind of seeing the USDA depart from this trend of every month continuing to up the export number. And looking into next year, there's a very big concern on my end, but also it seems the USDA is now starting to acknowledge this a little bit as well, that China might not be in for as many soybeans and that our export market might not be as hot and heavy as it has been in the last 3 years. If that's the case, it makes for a big problem because we have a pretty decent sized carryover going into this marketing year, and if the USDA's yield numbers are correct, we're going to have big production. So that 470 million bushel carryover, if these yield numbers don't come down, that number could still go higher. I also think the crush number is really quite high, and crush has been setting records here this year. And that's mainly a function of the fact that we ran out of soybeans at the end of last year. A 92 million bushel carryover is well below the USDA's pipeline number. And we saw that in the form of crushers running out of soybeans and soybean meal prices skyrocketing and giving us that oddly timed rally right in the beginning stages of harvest last year. October 3rd was the low. So when we did that, we really put crush margins at a really fantastic level. So we've been seeing this very strong crush here this year. But I do worry that we're maybe over crushing the market now. And when we get into next year, that we might see that crush demand start falling off because we've replenished stocks. Stocks are now in the places they need to be, and that cash market's not as hot and heavy anymore. So that's a concern of mine. Now the USDA did raise crush 20 million bushels here today, so that's not a here and now issue. That is a 4 to 6 months down the road issue. But that is something that I've got a big red circle on my balance sheet and a big question mark next to it that potentially is a concern for me.
So is it too soon to start looking ahead to September? We've got a quarterly grain stocks report coming up in September. Given today, USDA was more aggressive than the trade expected. Any thoughts about what we may see in the coming months?
Well, they've already aggressively cut projected soybean ending stocks also on the basis of the residual and the pipeline effects from the old crop and the flip basically from low ending stocks to very high ending stocks between the last 2 years.
Right. As of today, they cut it 15 million bushels to 240 million bushels. There's some people still out there arguing that we're closer to 100 million bushels. I guess we'll see that on the USDA's quarterly grain stock, which is their final. That'll be our ending stock number for soybeans.
Some of the pipeline effects, we're not sure if those disappearances that WASDE is projecting haven't been a little bit overdone based on the Q3 ending stocks. So the soybean stocks are kind of a real tough one to get a handle on right now with the residual losses, at least that component of it. It's possible, though, they've already taken out enough and maybe more than they should have for that residual pipeline disappearances. That could be a place where you get actually a little bit of give back if they've overdone the losses.
Right. Well, and also potential imports on the eastern seaboard too. I mean, I know basis is really very strong in the interior because it's very difficult for us to get South American beans to these areas. And producers have been fairly tight-fisted as far as letting beans go without knowing what this crop has looked like. But I think that cash frees up here in the short term. I also wonder if there were more imports to the eastern seaboard than what we knew about. Maybe not soybeans so much. Well, I think there's a chance for soybeans. I think soybean meal is where that one is. I think we have imported a fair amount of soybean meal from South America in the last few months.
So are there other factors that you're looking at beyond today's report? Obviously keeping an eye on the China demand situation, the devaluation of the yuan. Are there other macro factors, Corey or Ted, that you're watching as we move forward towards harvest?
Well, I'd love to hear Corey's thoughts on the acreage mix and if the market has a job to do as far as, we've seen this huge trend of a pullback in corn acres and adding to bean acres here and also in South America. Is that a trend that you think will continue, or is that something that the market needs to correct?
It's interesting timing on this report because August, I think, is one of the first months where you're getting a lot of decisions made by the South American farmers about what they're going to plant. And so here we are mid-August, and we're having a massive change in everyone's revenue projections. So we'll have to kind of see where things shake out. Up until now, given the prices on soybeans and the exchange rates, the soybean revenues are actually looking better for the upcoming crop in South America than last year. So it seemed like a lot of the acreage increases were already locked in. I don't know if we're going to get away from a big soybean crop in South America.
Yeah, their infrastructure is such that that's what they're going to grow.
Yeah.
The soil makeup. I mean, it'd be tough for them to go and plant a huge corn crop, for example. It's just not really in their wheelhouse.
The higher soybean acreage in Brazil, assuming we still get some expansion or even just hold on to what we've got, then that almost guarantees a high corn acreage because of the double cropping.
Right.
So South America, between the kind of at worst mixed picture on prices and exchange rates and revenues and the likelihood for some favorable weather for at least one more season, I think you're looking at a pretty pretty big crops, certainly of soybeans and maybe even of corn again in South America. Corn's a little bit harder to get a handle on because a lot of that is a second crop in Brazil, and that's you're talking about weather in May and June of next year, April, May, June, July, and that could do almost anything. So the corn crop's a little bit more volatile there, but beans are probably still big. And then then the market, as you get into late 2016, it's got some figuring out to do with corn and soybeans. But at that time, things could really be changing if we're moving out of these El Niños and into La Niña. Then things could kind of flip and go reverse, and we could see a lot more of what we saw back in 2010 and 2011 and maybe even 2012 here in the U.S.
And that's kind of what I'm thinking too. I think at some point the market has a job to do to stop losing ground on corn acres here in the States and to start regaining some of those corn acres at the expense of soybean acres. I think with the rapid expansion that we've seen in soybean acres and oilseeds just in general throughout the world, South America and us, I think we may be outpacing demand. And I think that demand had been inflated the last few years because of the China buying, again, rebuilding stocks from 12. I don't think we're going to see that as much this year. And if that's the case, we're going to all of a sudden be looking at a very big world carryover in soybeans, but also oilseeds as a whole. And I think, again, at some point the market's going to have to work and use price to do this to start cutting out some of those acres over time. And it's not likely that's going to happen in South America. I think likely it'll have to happen here. And then that'll be done with our prices and the relationship that we have between corn and soybean prices. I don't know if that'll be this year or next year. A lot of that depends on how the dust settles on soybean yields this year and if China comes in as a big buyer this year again. But if soybean yields are near where the USDA suggested here today, and China isn't as big of a buyer here this year, we're going to have a very big soybean carryover to go into next year, and we're going to need to buy some corn acres back because the corn balance sheet, although it is fairly, we have a big carryover. We've needed a record last year and a near record this year in order to do it. So, again, I think overall we need to buy back some of those corn acres and kind of maybe cut out some of the bean acres here in the States. And I think that's going to be an agenda of the market sometime in the next 2 years or so. So, if we're talking longer term, there you go, Chris.
No, I appreciate that, Ted. Well, gentlemen, I appreciate your time. It seems like we've covered all the pertinent topics because I have no questions from our online viewers, so clearly you've hit at everything. But before we close out, I thought I'd just give you both a chance for any final thoughts, anything we might have missed. Ted, you had the first word, so I'll let you go, and then Corey will get the final word. So, Ted, any final thoughts?
Yeah, as far as this report today, it came as a big shock to pretty much everybody involved in the markets, but producers in particular, because the guys that are walking their fields and some are looking at some really fantastic crops. Illinois or Indiana. Let's start with the bad ones. Iowa, Minnesota, Nebraska. We currently are projecting records for 6 states. Those 6 states look great, and we know about it. We hear about it. The guys in Illinois and Indiana, Ohio, Missouri are going to be looking at this report, shaking their heads, going, "I don't know how you're getting a 178 for Illinois, and it doesn't make any sense." So. I think to some extent we have to take this report with a grain of salt. I think that over time numbers will get a little bit closer back into line of what the trade was expecting, and ultimately I think after the dust settles we could bounce back up here a little bit. But longer term, the idea is I don't think we're going to be in a tight scenario here this year like some had hoped for. Talking $5.50 corn and $12, $13 soybeans. It just doesn't seem to be the case. Maybe next year is that case, or maybe if South America has production issues when we get into January and February timeframe. But I think as producers, we need to be looking at what we can do to add to our bottom line, whether it's if we haven't made any sales yet, look for a bounce to make some sales. But also you want to try to pick these rallies here and there to try to add pennies to bushels, maybe using call options to help add to your bottom line, because we're at prices right now where we need to kind of scrap out every penny we can. Longer term, as I talked about, I think corn needs to buy acres at some point, but that might not be an issue for the near term. That might be longer term. So I guess in the next few days, I would think the dust will settle on this report, and we might get a bit of a bounce off of that. But then it's all going to depend on weather and what South American weather is going to look like. But you got to be playing small ball on your marketing now at this point.
Great, thank you, Ted. Corey, just any closing thoughts, and while you're doing that, maybe you talk a little bit about the near-term weather forecast and what you see.
Sure. Well, yeah. Are the numbers at their peak? Have we hit the highest numbers that we're going to see this season from USDA? Maybe. If we come down from that in corn, we might not come down that much. Beans, that could still be pretty weather dependent. There's definitely some dryness in the eastern corn belt and the central part of the country, but we've picked up some decent rains in other places out west, and got some when we needed them in the south. So again, I think the downside is somewhat limited. We've seen beans do much better than we've expected them to during dry weather the last several years as well. And that's always been a big surprise as we've moved through some of the drought scares. So I think it's hard to get away from the bearishness in the balance sheet right now, at least from the supply side. Weather has to turn nasty really quick to really put a big dent in these numbers, and then to see a big problem with weather as you move through early 2016. Also, it keeps looking unlikely because of what's going on with the broader climate. I think you still are almost a year away from seeing a big change that really gives us the kind of problems that we had starting in 2010, 2011, 2012. The pendulum will swing, but I think we've still got a little bit more time to go.
Great. Well, thanks so much to our experts today. Corey Cherr with Lanworth at Thomson Reuters, Ted Seifried of Zaner Ag Hedge. Appreciate both of your time. An archive version of today's webcast will be available on our CME Group TV YouTube channel. That's youtube.com/CME Group TV. Thank you so much.